All right, mofos, we're about to go over equilibrium part 2. I think we're on video number 14, 15, 14. 15. We're on video 15. Holy crap. Last time this took me like a month to do 10 videos. Now we're on video 15 within 2 weeks. Look at that black. Oh, that's this arm. Look at that Black Panther. Come on. This sleeve. The line. The wing. We're going to have the best tattoos as a trader. Look at that chameleon on that motherfucker. Come on. Come on. Come on. Alright. Focus. Okay. Listen. We're going to go over equilibrium part 2. We went over what equilibrium is in the last video, part 1, how to identify it, how to use it from a swing high to a swing low. Most of the information was on the last video. Today's video is going to be a little bit more simple. Again, last video is still a little bit longer than I wanted it to be, but today we're going to use it in the live market, and we're going to show you how you guys can use it. Does that mean you should go and use this right away in the market, and when you see equilibrium and you see price react off a discounted price range? No, we still have to go over what a breaker block is, an order block, Fibonacci, SMTs. We have a whole lot of stuff to go over. Then we're going to go over our strategy creation, where I can show you guys how to implement this into your trading, and then we'll go from there. But again, this is how I learned equilibrium. If you don't like it, you don't got to listen to it. This is how I use it. This is how I identify stuff with it, and we go from there. Turbo, speak. Ooh, speak. Whoa. Can you come say hi to the camera? Come here. Up. Come here. Up. Turbo, come. You say hi to the camera. Up here. Come here. Up. Turb. You're coming to say hi to the camera. Hey, up here. Come here. Up. Hey, sit down. Listen. Sit. What are we going to teach him? We're going to teach him how to learn what? Sit. Look at the camera. What's out here? Ready? We're going to teach them how to learn equilibrium. Speak. Say equilibrium. Speak. Ooh. Speak. Oh my god. Alright, we're going to cut to the video. Okay. Alright, so we already went over the definition for equilibrium, how to identify it, how to use it, and what it means, right? That was in part 1. So again, if you want to go back, watch that video, go back, watch part 1, so we can just go over how to use it in the live charts for you guys to learn. So, other than that, what I use equilibrium for is a continuation confluence, or you guys can use it for your daily bias too, just to see where price wants to go and deliver from. So let's first go over daily bias. So something we can use equilibrium for is to see if price is going to retrace back down into equilibrium, react off equilibrium, and continue up in the direction we want it to go in. So again, let's go on the daily time frame, right? And we'll look for an example here. So again, here's a good example. Look, so let's say cut all this stuff out right here, right? Let's go from the black line. All right, so from this high forward, right? You guys see the black line there? You should be able to. Yeah. All right, so if I were to use equilibrium here, let's say we're on the daily time frame, right? And we're trying to get our daily bias for today on Tuesday the 17th, whatever, December 2024, right? Again, we're using this for an example. We can use equilibrium for an area for price to come back, retrace into, and say, hey, if we hit this area on this day, on Thursday the 26th or something like that, we can draw out equilibrium from, again, remember, if we're in a bearish trend, from the swing high to the swing low, right? Swing high to swing low. As we can see, price came up in a discounted price range. We continued down. We ended up getting a downtrend out of it. Price came back up into this area, tested it again, continued down, we came up back into it again, continued down, price came up back into it again, continued down for a long time. But again, this is on the daily time frame. This is an area where you could have scaled down to the 4 hour, the 1 hour, maybe look for a liquidity sweep, and if you don't see that, use equilibrium. See that we broke structure to the downside of the 4 hour, the 1 hour, and then scale down to your lower time frames and bang, bang, boom. We would go from there. But again, we're just learning how to identify it. So again, you can use this for daily bias. Like again, if I get daily bias, I usually go on the 4 hour and the 1 hour. So let's say find an example. I want to find an example in an uptrend. All right, we could say here, look, equilibrium from the swing low to the swing high. Let's see if we touched it here. Nope, we didn't touch equilibrium here. Let's go up to this one, swing low from the swing high, bang. Look, perfect example. If my magnet will not, hold on, let me turn my magnet off. Okay, look. Swing low, right, to the swing high. We're in an uptrend. What we can see here, right, let's say we're looking at the market at 2 p.m., right? Price is chopping up here. We want to see a retracement into some area. Either this, maybe this 4-hour fair value gap or this 4-hour fair value gap, and we have equilibrium, right? We mark out equilibrium from this low to this high. We can see price comes down on the 4-hour time frame into discounted price range. We get buying pressure out of it. We close above the 50% level, right? Let's say we scale down to the lower time frames. Maybe look for a break of structure, an inverse fair value gap, something like that. We can literally see we get a 1-hour break of structure to the upside along with equilibrium getting respected on the higher time frame. Scale down to an even lower time frame. Look for an entry here, target, buy side liquidity, wherever you want to do, blah, blah, blah. We'll get into that stuff later, right? We're just showing how this stuff can work and how equilibrium works for us to, I don't know, get either daily bias or use it as a continuation confluence. I mainly use this as a continuation confluence, but sometimes I use this as a daily bias. If we don't have any draws in liquidity to target, prices looks like it's going to do a retrace, we don't have any fair value gaps to see where price can bounce off of, this is something you can use as another tool to identify if price is going to retrace back up from discounted price range and continue in a different direction and then go from there. Got it? All right, go over another example. Let's look for one on the 4-hour again. Let's say we're getting our daily bias, right? Let's say we are in, let's see if we get one here. I think we get one from this one right here. Look, we're in an uptrend from this swing low. Holy crap, that's not the GAN box. From this swing low to this swing high, literally guys, butter. Like, this stuff works. Look, daily bias. Let's say, hey, we want to see if we can get a reaction off equilibrium here. If price wants to come down to equilibrium and react off of it, we can look for buy positions once we get to the 50% level because, again, we inverse this 4-hour fair value gap. Here's another draw where price can reverse from. We have another 4-hour bullish fair value gap here. Price taps into this bullish fair value gap and equilibrium to discounted price range. We end up getting buying pressure out of it. You could scale down to the lower time frame. Let's say look for a break of structure to the upside, maybe on the 1-hour if you wanted to. Again, we're not going over the strategy yet. We get a break of structure to the upside, you scale down, look, and then we literally have a fair value gap right here, fair value gap fill, scale down to lower time frame, price continues up. But again, this is on the 1-hour now. Price came down, tested equilibrium again, tested it another time, and then we got a huge shot up. Price even came back down, respected equilibrium another time, and another time, and another time, and kept continuing up after that. All right? But again, that's something you can use to get your daily bias. Again, I'm kind of going over it very quickly, but I'm not trying to confuse you guys because, again, this isn't a daily bias video. This is just showing you how equilibrium works and how price reacts off of discounted and premium price range, or the 50% level, you could say. This is just a video to show you guys how it works, and then we're going to get into the future videos of where we're going to put a strategy creation together and how to use this stuff in a daily bias video. I'm pretty sure I already put out a daily bias video also, but again, I'll probably put out another one because, again, I got to stop saying that multiple times. Holy shit. And I always say but other than that. But I'm probably going to keep posting more and more videos as I keep growing on social media because I'm not the best trader in the world yet. I've gotten payouts. I've made money doing this stuff, but am I consistently making a shit ton of money like most of these people yet? No, but I'm going to prove that over time. I still know how to trade. I know a good strategy, but you got to remember psychology, risk management, emotions, all that stuff gets involved with it too. But I know my strategy. I know what I follow every single day. I feel like I have the room to talk about it and teach you guys. But overall, again, I'm going to keep growing as I get more experience in the markets, and I'll just make more videos as I get more experience. But overall, I know how to use equilibrium pretty well. I've been using it for the past two years now, 2.5 years or whatever. And I don't know, it's pretty simple to use. It's something you can use to help you get a better bias on your daily bias, or show you that price is going to continue in a certain direction, using it as a continuation confluence. And that's what we're going to go over right now. So let's say, hey, we have, again, you guys should already know what liquidity is, right? So let's look for an example. All right, look. Let's say price comes down, we sweep out a 1 hour low, right? We sweep out a 1 hour low here. Let me put my magnet on so this gets right to the low. Let's say, look, price comes down, sweeps out a 1 hour low. We scale down to our lower time frames, right? I don't know if there was news that day, but it looks like it. And this is on market open. So look, we sweep out a 1 hour low. What we'd wait for? Break structure to the upside, inverse fair value gap, something like that. Again, we're not going over strategy. Where do we get our break of structure? We get our break of structure right here, right? Literally an example. I see it right away. What do we see? Price continues up, right? We want to see a retracement down into equilibrium, a fair value gap, or the Fibonacci. We haven't went over Fibonacci yet. We'll go over that. What do we get? We go from the swing low to the swing high. Like, look at this. Literally perfect. What do we get? This is on the 5-minute time frame. We get a high time frame draw of sell side liquidity gets swept. We come up, we break structure on the 5-minute time frame. We look for another continuation confluence. If we want to look for this 5-minute fair value gap, that gets disrespected, but we're expecting price to continue up, right? So we draw out equilibrium. Equilibrium gets respected. Price comes down to discounted price range. We get a bullish candle out of it. Did we close above the 50% extension yet? No. So that's not valid to enter yet. Did we close above the 50% extension here? Yes. But again, this is where you'd most likely scale down to a lower time frame. Again, you could enter here if you wanted to on the 5-minute. Put your stops either below these lows or where equilibrium gets invalidated, and target your draws and liquidity above. Here you could literally target a 1 to 2, right? Or even more if you let the trade run longer, if you're trying to swing trade or something. But again, we're not doing that. But here's an example of liquidity sweep. Break structure to the upside. We see equilibrium gets respected on the 5-minute time frame. We probably most likely scale down to the lower time frame here, right? We scale down to the lower time frame here. We can literally see again, equilibrium is probably going to get respected again. So look, we have a fair value gap here. We broke structure to the upside. This is where we probably respected equilibrium on the candle closure. We have this fair value gap here, but it didn't get pushed into, right? I mean, it might have actually a little bit. Let's see. Nope, it did. But look, it did. This would be a good entry. Look, we respected equilibrium. We scaled down to the 1-minute time frame. We have a fair value gap. So we have one confirmation. What is that? High time frame liquidity sweep, right? There's one. Number 2, break a structure on a 5-minute time frame. There's 2 confirmations. Number 3, price respected equilibrium, right? Holy shit! I think I have a speech impediment or something. Whew. Number 3, we respected equilibrium, right? Scale down to even lower time frame to look for entry. 1 minute, we form a bullish fair value gap. We get a bullish entry out of it. This could be your entry right here. Stops below these lows is probably where I'd put that. Again, we're not going over take profits and stuff like that yet. First take profit could have been at these highs for a 1 to 1.4. If there's a draw on liquidity above here somewhere, which I imagine there is, or something like that, you could have hit almost a 1 to 3. Here's a 1 to 2. Like, it's a good trade. But like, this is literally an example of showing you an entry as a continuation confluence. And let's see if equilibrium in the 1 minute also. Equilibrium from these lows to these highs. Look, on the 1 minute time frame, we also could have used an entry. If you didn't want to use that fair value gap, that wasn't enough for you. Price comes back down. We go from the swing low to the swing high. Let's exit out the 5-minute one. Right? You use this as a continuation confluence. So we go from the swing low to the swing high. Price comes down to discounted price range. We come back up, get a bullish reaction out of it. This could be your entry right here. Stops below where equilibrium gets invalidated. First TP could be these highs for 1 to 1 basically, or wherever your draws and liquidity were above. Like, price ran up even higher. Like, again, if we go all the way to top where price range, that's a 1 to 4. Like, if you're chasing a 1 to 4, that's some crazy shit. And again, look, if you held the trade all the way to here, you wouldn't have been stopped out even at break even, and then price, look, continues up. Like, this stuff works. You just got to learn how to use it correctly. Like, once you learn how to use this stuff correctly and you have good risk management and good psychology and stuff like that, that's why I hate when people talk shit on strategies and confluences and stuff like that, because whatever works best for you, use it. You got to know when to use it at the best times, when the market looks good to use them, and when the setup looks obvious. Like there we had four confirmations that price was most likely going to continue up. You had 5 if you wanted to use equilibrium with that on the 1 minute time frame. We had 4 with the fair value gap on the 1 minute time frame showing us that price is going to continue up. If that wasn't enough for you, you could have used equilibrium on the 5 minute too. And then that's 5 confirmations that price is most likely going to continue up. Your probability of that trade hitting is probably pretty high. At least like 70 to 75%. I would take those odds over 50-50, you know? So it's like, I don't know. Let's go over another example. I'm going to shut up. Let's go over another example. All right, look. Let's see if we get something here. 1 hour sweep, right? We'll scale down to the lower time frame. Where do we sweep that draw? Right here. All right, we get a 1 hour sweep. Let's see. I don't think I see anything here. You can go from this swing high to this swing low. I mean, I wouldn't even go on that. 15-minute time frame maybe. No. Okay, we don't get anything there, and that's okay. Sometimes we're not going to get this stuff, guys. I'm just trying to go over equilibrium. There's probably other confluences there we could have went over, but again, I want to go over equilibrium. Let's go on the 4 hour time frame. Let's go here. We have a 4 hour sweep. 4 hour sweep of these lows. 4 hour sweep, scale down to the 5 minute time frame. Again, we're not going over strategy creation yet. We're just showing you equilibrium. All right, let's see. So we get a 4 hour sweep. We get a break of structure to the upside, right? Let's see if we can get it. We get a break of structure here to the upside. We'll mark this red. Let's go from swing low to swing high. Did we touch an equilibrium here? No, we ended up just touching into this fair value gap. Let's see if we can find another one. Let's see up here. Price wants to continue up, right? Let's go from the swing low to the swing high. Literally again. Look. Let's say we sweep this 4 hour high, right? We didn't get in on this entry right here. We weren't comfortable enough yet, right? So we get our break structure to the upside. We're on an uptrend on the 5 minute. We swept 4 hour liquidity. We're on an uptrend in the 5 minute. We're looking for a continuation confluence to continue up, right? What do we get? We get our 5 minute equilibrium right here from these swing lows to this swing high. Scale down to the 1 minute time frame. We're monitoring. Where is this? Does this not even let me go back? Oh my God, it doesn't. It doesn't. All right. There's probably an entry in there where we'd either get on the 1 minute time frame where we came down, we came under equilibrium, we get a break of structure to the upside, fair value gap fill, continue up. But let's even say we wanted to enter off of the 5 minute time frame. Price comes down, we respect discounted price range, we get a bullish candle closure out of it. You could either put your stop at this low, but I'd probably recommend putting your stop right where equilibrium gets invalidated, right below this low. Again, you're on the 5 minute time frame here. You could have targeted a 1 to 2.27 and price even continued up higher. So again, there is another trade that could have worked in your direction, right? When we're just showing how equilibrium works and how you can use it as a continuation confluence, this is where I mainly use it, and it's pretty simple, right? So again, let's go to the 15 minute time frame. We'll scale down to the 1 minute. Let's look for a 15 minute sweep. Didn't sweep those lows, didn't sweep those lows. Let's look one to the downside. Alright, we'll go here. I don't even know if there's gonna be an entry here, but we'll find it. So we go from this high, right? We sweep out this 15 minute high, right? We scale down to the 1 minute time frame. Again, we're not going over entries and exits and shit yet. We're just going over equilibrium. Right? So look, we sweep out 15 minute draw on liquidity, right? Look for 1 minute break of structure to the downside. So we get a break structure to the downside, not on this candle, on this candle, right? So what do we most likely want to look for? Equilibrium. Again, we have this big fair value gap fill. This could have been an entry for us. Again, if we were going over the fair value gap from this candle's low to the third candle's high, we should already know what fair value gap is. This could have been an entry right here. Stops above this high. Price flooded the face of the earth. But again, we're going over equilibrium. Let's see if we get equilibrium from these highs to these lows. We literally do. Perfect. Perfect. Look. From the swing high to the swing low. Now we want price to go in a downtrend. We swept 15-minute draw on liquidity. We scale down to the 1-minute time frame. We look for a break of structure. We look for our continuation confluence. What do we have? Number one, liquidity sweep. 15-minute buy side liquidity was swept. Number one. Number two, scale down to the lower time frame. Break of structure. All right, we're looking good. Number three, what do we get? A fair value gap. Right here. From this candle's low to this candle's high, fair value gap. Number three. Number four, equilibrium. Price comes into discounted price range and this fair value gap. We tap into both, get a selling pressure out of it, a candle closure out of that discounted price range and that fair value gap. Entry. Stop loss for equilibrium gets invalidated. Look at this. You could have targeted these lows right here for a 1 to 2.28. And price literally, I don't know what happened this day. Maybe this was war news or something. But look. A 1 to 11. Like, I'm not saying you're going to hold this trade this long. But again, like if you want to just target those lows that we just talked about, you can target the 1 to 2. Right here. That's still a good trade. That's a 1 to 3 right here at these lows. Excuse me, wow. You have all these draws in liquidity. You have this draw in liquidity, 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 you have this draw in liquidity. Could have targeted all these. 1 to 7. Like, it works. It really works. Equilibrium works, guys and girls. Like, it's just, I don't know. It works for me. If you don't like it, you don't have to like it. But again, I think it works really well. It's just something you could use for continuation confluence or get your daily bias. Like it's a good tool to use. I'm not saying it's going to be your holy grail and make you profitable. You have to use it with other stuff and put the puzzle pieces together to use it with other stuff. But again, we're going to go over that in the future once we start doing our strategy creation. There's a strategy we can build off of using equilibrium with the strategy. So it's just, it's common sense once you guys learn how to use it, and you're going to see that once you study it over time. So again, look, we're on the 1 hour time frame. Let's see if we even have it here. Price wanted to chop around a little bit. We didn't get it. It's not a big deal if it doesn't work, but you guys could see just because we get above this area, we'd scale down to a lower time frame and look for other continuation confluences. You're not just entering off the 1 hour, right? This is a potential zone where price can reverse off of. So it's just, it works. I don't know what else to say. Like, look, we have this swing high to this swing low. Price came up into equilibrium, discounted price range. We get selling pressure out of it. This is on the 1 hour time frame. If you scale down to the 5-minute time frame, you could have got an entry down to here and targeted these lows. Right? Like, price came in at discounted price range. We let's say we're looking for our daily bias here. We scale down to the 5-minute time frame here. If it even lets us. Like, this is still a good trade. Price comes up into discounted price range. What are we looking for? We're looking for a break of structure to the downside. Like, even here, if we came into discounted price range on this move. Came in discounted price range. Did we get a break structure to the downside? No. Did we get a break structure to the downside here? Right here? Yeah, we do, but we end up breaking structure to the upside. When do we get a break structure to the downside again? Right here. Right? And then you can literally scale down to the lower time frame. We're on the 5-minute time frame now, right? We go from this swing high to this swing low. Now we're on the 5-minute. What do we look for? We look for equilibrium. We scale down even lower. If it lets us here, let's see. Nope, it doesn't again. Well, let's go. Let's stay on the 5-minute. Again, this is just an example. Let's go back so everything was where it was. Where were we? Come on. Alright, there we go. Like, even on the 5-minute time frame here, guys, again, we'd probably most likely scale down to the lower time frame, but look, we broke structure to the upside. To the downside. After using a 1 hour equilibrium to see where price can react off of, we get break of structure to the downside. Price wants to retrace back up into equilibrium, right? We also have this fair value gap. We come in a discounted price range. We get selling pressure out of it. This could have been an entry if you're basing it off the 5-minute time frame, which I usually don't do. But again, you're going to go back and back test this and see what works best for you. But again, put your stop loss where equilibrium gets invalidated. Guys, like you could have targeted these lows right here. That's still almost a 1 to 2 on the 5-minute time frame. That's still a big trade. Like that's still how many points? That's still 62-point trade. Like we got a reaction off of this area from the 1 hour time frame. If this was the area where we trade, we want to get a little trade out of it, we're going to do it. Like it's like we came in, we used the 1 hour time frame, we saw price come above into discounted price range, we scaled down to the lower time frame, looked for a break of structure and a continuation confluence, we see equilibrium again. There you go. You could even enter on the 5-minute time frame here. We come in a discounted price range, get selling candle closure out of it. Bang, entry, stop loss for equilibrium gets invalidated. Target your draws on liquidity below. You target this draw on liquidity, probably wouldn't because again, it's not even a 1 to 1. I would probably target this one for first TP to 1 to 1.3, and then you can even target this one, right? You would have got your like taking 50% off here, stops to break even. You still made money. Like it's. You would have got stopped at a break even. Like this stuff really can work. Like you just got to go back and back test and just learn how it does. So I don't know. Hopefully that just explains it better for you guys so you understand what equilibrium is. A lot of people use this tool in trading. I use it every single day. Again, if you want to watch me use this stuff and see how I trade, you can join my free Discord. You can watch me on YouTube Live. Again, I do everything for free. I don't charge anybody for anything. I just love putting these videos out there so you guys can just upgrade in your trading, right? The stuff that I'm teaching you is not fake shit. People are out there showing you on social media and everything the same strategy, but they just explain it differently sometimes, or they'll explain it the same. You guys just came across me. I'm showing you the truth and real reality of trading of my journey. I don't know what else to tell you. This is the stuff I use. It works for me. If you don't like it, move on, right? So, other than that, I hope this explains it for you guys. Again, I can always make more videos in the future, but I want to get this whole series done with. I'm going to become more experienced as I get better as trading in the future. So we all can grow in our journey. So other than that, I mean, hopefully this helps a little group of people out and just helps you become better at trading. But what you should be doing is you should watch part 1, watch part 2 of equilibrium, go back and back test this. Back test it for hours and hours until you understand it and you can see it working with your strategy. Again, we're gonna be making a strategy creation video in the future, but other than that, just go back test this. See how the market reacts off of what we already learned already. Use a liquidity sweep, a break of structure, a fair value gap, and equilibrium. Go back and back test those. High time frame, draw on liquidity, 4 hour, 1 hour. Look for a sweep, scale down to the 5-minute. Look for a break of structure. Look for equilibrium to get respected or a fair value gap. Scale down to the lower time frame, like the 1 minute. Look for a fair value gap getting respected, equilibrium getting respected. Boom, entry. Go back and back test it. I promise you, you will go see that. Back testing that in the market, and you will see it work multiple times. Is it going to work every single time? No. But that's when you're going to start getting more experience in the market and know when to follow your rules and sit out on trades when it doesn't match up to your bias. Even if the trade goes in the direction you expect it to go in. That's when we're going to start getting into more psychology stuff. You're going to have to learn how to sit out on trades that you know it's going to go in that direction, but it didn't match up with your confluences. Didn't match up with your rules, so you couldn't take it. That's where people try and talk shit on these strategies and stuff because, again, you're going to see it multiple times. If it doesn't respect what you're doing and you follow your rules and all that stuff, you can be profitable in the long run using these tools that I'm going to teach you guys over time. Okay? I think that should be enough there. This was still a 30-minute video. It's crazy how quick these videos go by. It's insane. But I don't know. I'm just trying to help as many people as possible with strategy. I believe in everybody. Again, I think trading's possible for everybody. If you put in the time, you put in the effort, I truly think you can accomplish your goal of just doing this full time and making the money you want to make. But again, it's going to be a process. It's going to take time. I'm still growing at my stage. I'm not where I want to be yet. I still have a lot to grow. I've made mistakes. I've blown accounts. I'm working on rebuilding my PA accounts right now because, again, I tell this story a million times. When I built up to my 11, when I was trying to build up to 20 and the 150Ks, I blew those. It's like, guys, I'm not the best trader in the world yet, and I will sit here and admit that. I don't give a shit. I'm not trying to impress nobody. I'm just trying to teach you what I've learned, and what a lot of other people even teach online, like, again, there's nothing special about this stuff. Like, I'm not the creator of the strategy. I just know how to use it, how it works, and I'm here to show you guys how to do that and just help you evolve in your trading, and then have you learn how to do this stuff on your own so you don't need to trust anybody, right? I'm not here to give you signals. I'm not here to do any of that stuff. Learn on your own so you have the ability to trade whenever, wherever you want on your computer and be able to travel the world and do whatever the hell you want instead of relying on somebody to just watch and give signals, you know? Just, I'm trying to help as many people as possible. Again, if you don't like the way I trade or teach, just, you can go watch somebody else. That's totally fine with me. No hard feelings. It is what it is. All right? Hopefully you guys learned a little bit from this. I'm going to stop yapping now and eat some food because, again, I just got back from the gym. And we're going to continue getting these videos out. We're on number 15. I think we have 15 more, 20 more to go. But other than that, I'm giving you guys the truth, the real reality of my journey. This is the stuff I know. I know I'll say that a million times because there's so many people on social media who talk shit. And it gets annoying after a little while, but I'm learning to block all that stuff out. Be myself on social media, show you guys the truth, and just, again, it's my journey. The success will show over time. I'll let my success do the talking, and I'll also let the success of all the people that I teach this stuff to do the talking also. All right? Appreciate it. Love you guys. Hopefully you guys are liking and subscribed if you're watching this video. And keep watching these educational videos. If you go back and look at the views, go back and look at the views of the first video. It's like at 115 views or something like that. And then we go down to the most recent ones. They're at like 6 or 4. Like, again, maybe it's not because I haven't blown up yet on social media, and I hope I do one day, but if you're sticking to watching this stuff every day and you're going back and back testing this, putting it in your notebook, learning this stuff, and truly dedicating yourself to this, I promise you, give it a year, 2 years, maybe 3. You guys will understand that this stuff works, and you'll get to where you need to be. All right? I believe in you. Let's get it done. Appreciate everybody's like and subscribe, and I'll see you guys tomorrow.